joining us for a closer look on what's currently playing itself out on that market scene is Annatjie Van Rooyen from MyWealth Investments. Annatjie, a pleasure. Good afternoon to you.
Good afternoon. Thank you for having me.
Fantastic. Annatjie, bit of a weird week to the start of the week. I think the all-share index down just under 1%. It's quite a bit for this. I'm wondering what exactly is driving this behavior today.
Yes, I think we're taking our cue from the Chinese market this morning, but not only that, also a narrative of higher interest rates for a longer period of time as Fed speakers over the weekend have been pushing back on the trigger point for interest rates to start coming down. We're now looking only at the second half of this year, so that means that dollar strength has not peaked yet, and that 10-year yield in the US not coming down significantly enough to provide the tailwind that the emerging markets need. So we're looking forward to see the PCE numbers later this week out in America to see what's happening with inflation on that front. We're expecting a slight uptick, but I do think that the narrative of inflation that is moderating still remains in place, probably just the January seasonal effect. And then furthermore, very importantly, the PMI numbers on Friday out of China. And we would love to see if the stimulus announcements up to date have been making any difference to those numbers. But I see the market's at least expecting a stabilization in the non-manufacturing PMIs.
Also, keen to get your thoughts on what we're expecting out of the Eurozone. They're also due with inflation out this week, Annatjie. Anything that we are anticipating for that part of the world?
I think their inflation number is expected to come down to 2.8%. So that narrative also 100% intact with moderating inflation, although we're still also facing lower growth on their side. So I think rates to be on hold. ECB, I think there's an announcement or something ECB speakers are speaking later in this week, but not expecting any action on that side. At least they're making their way towards a 2% target, which is positive.
I must ask you, as we're seeing the rand enduring maybe all of the weakness that we're seeing out of it, does that have to do with that higher for longer interest rates in the United States? The rand is edging closer to 20, something that we all were hoping not to have to deal with.
Yes, 100%. I think it's definitely dollar weakness, dollar strength that is not peaking yet. That is what the rand is discounting at the moment. So that's a huge disappointment for emerging markets because we need the interest rate cycle to start turning down. And we know that it is happening. We're just not sure when because the Fed speakers keep pushing back on that trigger point. So that definitely has a huge impact on the rand and other emerging market currencies as well.
Another interesting thing emerging in the United States this week is President Joe Biden meeting with congressional leaders with regards to government funding and that issue of a shutdown. Now, we know the shutdown won't happen. I think we've seen enough of it, Annatjie, but this conversation keeps emerging and it keeps becoming a contentious issue. I'm wondering if that's something to just watch as a risk, even if it's something, that might not become anything more serious, just that bipartisan relationship there between the Republicans, the Democrats, and what that means for the American economy.
Yes, look, this is nothing new, and I think we all know that they will probably resolve it last minute, but unfortunately it does create uncertainty for the markets, and the markets don't like uncertainty. So the market will wait for that outcome before you see any definite moves in the markets. We also have the big retailers in the US coming out with earnings this week, and that will give us insights into the health of consumer spending in the United States. So let's hope that the debt ceiling can be avoided, that they can agree on a spending package. And, obviously the focus will be shifting from earnings now to monetary policy. So let's hope and pray that we can get that uncertainty out of the way pretty quickly.
Keen to get some company news in here. Let's talk about Sasol. That share price down more than 5.5%. So investors not receiving, that update very kindly. Keen to get your thoughts here. We are seeing a 34% decline in half-year profits.
Yes, Sasol result, market not happy with that. The company did state that volatile macroeconomic environment, obviously, and lower oil and petrochemical prices had an impact on the business, as well as inflationary pressures, and then also the underperformance of the state-owned enterprises, which form part of the value chain of Sasol. So the company reported a decrease in turnover of 8.7% and headline earnings per share down actually within the guided range, about right in the middle of the guided range. Guided range was for 19.9 to 17.9 to 22.2, and they came in at 20.30. So within the guided range, but there are two things that I think are spooking investors here. First of all, they have flagged an error regarding the reporting on some purchase agreements in the previous 6 months. And one would have to do some further analysis to see the impact of that. But obviously, it has to be significant if it is flagged. And then the other thing is the remeasurement items of 5.8 billion. That is because of impairment of capital expenditure incurred during the period. And of this 5.8 billion, about 67% relate to the operations in Secunda. And this is after impairments of 6.4 billion reported in the previous period. So this is quite significant, and the market was not expecting this. So I think that's why that share price is reacting so negatively.
Your perspective here, Annatjie, just a rough patch for Sasol. Can everything still be turned around?
Yes, I do think so. Look, the valuation is very low. Obviously, the dividend has also come down from 7 Rand to 2 Rand. This is something that investors don't like either. But it's part of the commodity cycle. And if you compare the Sasol results to the results of the other commodity producers, it's nothing out of the ordinary. So, and at some point the cycle will turn, and we need the interest rate cycle to turn before we'll see this cycle turning. We also need China to come to the party. We need to see more aggressive policy announcements from China so we can see the counter-cyclical initiatives starting to happen. So, yeah, I think it still offers good value at these levels. And if you take a long-term view, it's not a bad investment. It's a cyclical investment, that's all.
Now, Annatjie, I'm keen to get your stock pick in a bit, but first I'd like us to reflect on counters that your industry peers have liked.
It's a company called ASML. It's a European-based company. And what they do is they produce the machines that are used to produce the computer chips that NVIDIA and, AMD and all those other guys sell. You look at the NVIDIA's share price going up 15%, 16% yesterday, going up, multiples over the last couple of years. Look at AMD, look at even ARM that did over 50% in one day, 50% in one day. These guys all are competing in the chip space, but there's one monopoly above them all. It's the guy that makes the chips, the machines that make the chips, and that is what ASML does.
We've seen the big banks, for example, run quite hard. I've called ABSA before. It's kind of, the wicked stepson of the market at the moment. So the other banks have been strong. ABSA, in large part, has languished. My bottom line is, I think it's just too cheap. You're looking at a multiple of under 7, a dividend yield of, around 8%. It's just too tempting. So I think if you're looking for big cap, solid with upside, I think ABSA is a good one to play.
I'm keen to get your thoughts on those counters, ASML as well as ABSA.
Yes, ASML, supplier of equipment to the chip makers, definitely very good growth prospects. Even the management of the company is extremely positive on the prospects going to 2025. They were a bit more conservative on the outlook for 2024. But I think your biggest risk there is the possible restrictions on exports to China. But the investment case for the company is certainly, one cannot fault that. So especially for the prospects around 2025. And then ABSA is also my stock pick. I'm going to stick with that one. I agree. And I think it's a very nice defensive play in this market where you can sit back and collect a forward dividend yield of 8%, while you're also looking at a valuation that is low. And that doesn't just go for ABSA, it goes for the entire banking sector on the JSE. These banks in South Africa have strong balance sheets, and I think all of them are undervalued. But seeing that ABSA has underperformed the others, I think that's the one that we go for at the moment.
Fantastic, Annatjie. Always a pleasure having you with us. Thank you so much for starting the week off with us. That was your midday markets update with Annatjie Van Rooyen from MyWealth Investments.